Ladies and gentlemen, today we are starting our conference, FxCon 2025. So we have three dignitaries within us who will be giving their perspective on the various aspects of our business. So now all these three people are from different segments of our fraternity. Like we deal with many kind of regulators. So RBI, enforcement, FI in the morning we had a webinar, you might have all heard it. So that is one of the regulator and accounting part. So Funny sir will take care of the enforcement related information. Desai sir, no need to tell, he is an expert in RBI related information. And for accounting, Mr. Ramesh sir.
Myself, CA Ramesh Athasniya. I'm partner in Ramesh Athasniya and Company Chartered Accountants. I'll be throwing light on the taxation matters, GST, income tax, and as regard the accounting, the SOP is what we have to follow. On that portion, I'll throw light with related to FFMCs. What we have. Thank you.
Now we'll ask Funny sir to start the conference and his aspects he'll be speaking. I request everybody to just make a note of the doubts if they have something to ask. Will not disturb in between the conference. After all the three dignitaries complete their speaking, then we'll ask the questions.
Lesser discussed world of full-fledged money changers or FFMCs. एक्चुअली मुझे जब पता चला FFMCs तब मैंने सोचा कि ठीक है थोड़ा बहुत मालूम अब तो पूरा डाइव इन करना पड़ेगा तो then I plunged into it and thanks to Funny Kumar sir who has given us the opportunity. So I will be just throwing the light on the taxation challenges, the accounting part, and the SOP is what we have to do. बाकी both these people are more काफ़ी मेरे से बहुत ज़्यादा जानकार लोग हैं तो ये ज़्यादा आपको बता पाएंगे कि कहाँ आपको क्या करना है क्या नहीं करना है. So and the complex taxation and regulatory maze they must navigate. As agent of India's foreign exchange ecosystem, FFMCs play a critical role, yet they remain burdened by layered legal obligations, as what we are hearing from both the sirs. So let's begin with income tax challenges. FFMCs earn through currency margins and commissions, but reconciling this with audit trails and SFT reporting is anything but straightforward. Unlike small businesses, presumptive taxation under 44 AD is off the table due to the nature of their transactions. But Section 44 AB audits often trigger by high cash volumes. Next, the GST compliances add further complexity. Forex dealings are considered as services. Under Rule 32, FFMCs must choose between the margin-based or slab-based valuation. Every year they can change at the opening of the year. Added to that, the ambiguous place of supply rules and block ITC credits. FFMCs often feel like they are walking on a compliance eggshells. But anyhow, you are a part of that, you have to do it. Moving to TDS and TCS, FFMCs must split hairs over whether the commissions fall under Section 194H, 194C or 194J. Moreover, outward remittances under LRS attract TCS ranging from 5% to 20% depending on the context. Cash handling, that too has its minefields. Section 269 ST and 40A3 get strict boundaries. KYC and AML procedures, they are not just operational. optional. They are survival essentials. So you have to compulsorily adhere to it. The specter of SFT compliance under Section 285BA looms large. Transactions over 10 lakh per person require detailed reporting via Form 61A. Miss the deadline or get the data wrong, and penalties start rolling on daily basis. Then there is FEMA and transfer pricing. The global dealings must comply with RBI directives, FEMA norms, and in case of affiliated entities, transfer price documentation. So how do FFMCs stay ahead? Through rigorous internal and statutory audits, quarterly inspections, physical currency verifications, reconciliations, and automated tracking. Submission of a RBI Annexure 2 and 3 daily, denomination-wise logs, and proactive KYC norms that forms the routine backbone of responsible FFMC operations. Yet mistakes creep in, missing PAN numbers, outdated KYC files, incorrect GST treatment, or lack of internal controls. And these aren't just operational hiccups, they are audit flags, penalty triggers, and reputational risks. Because firms are at the risk of reputation if they are doing anything wrong in that. So what's the way forward? The way forward we say is automation, SOPs, regular training, centralized monitoring, periodic mock inspections. In a world of growing scrutiny and regulatory evolution, FFMCs must evolve from reactive compliance to proactive governance. I can throw light on this. These are the summary points which I have made up. We can start from the first page, I think so. The taxation nuances of FMCs. Yeah. आप लोग वहाँ सामने भी देख सकते हैं तो इजीली हो जाएगा. मैं थोड़ा आगे जाता हूँ. So as regards the TDS and TCS compliances, TDS under Section 194H applies when the commission is paid to the agents or sub-agents. We have to timely deduct and pay the taxes before the time of the next succeeding month, before the 7th of the next month. And any of quarterly returns are to be filed in that subject. As regards some payments to the vendors which may attract 194C or 194J, based on the nature of their services. Then the TCS under 206C, 1G, that's the LRS transactions. If FFMC handle outward remittances under the liberalized remittance scheme, TCS provisions may apply. That 5% or 20% based upon the nature, if the PAN card is available or not, all those things are. Then as regarding the cash handling restrictions, transactions above prescribed threshold may violate Section 269(h)(3). Presently, it is 2 lakh per day per person, and lead to disallowance under Section 40A3 for cash expenses in excess of 10,000 rupees. So whatever the cash expenses in excess of 10,000 rupees, we have to pay to check. Then the compliances with Prevention of Money Laundering Act and KYC norms is essential to avoid this scrutiny. SFT compliances. FFMCs may be covered under SFT reporting obligations under 285BA, especially again for the high value cash deposits, foreign exchange purchases or remittances. The FEMA and transfer pricing wherever if they are applicable when we do the cross-border transactions. Cross-border dealings might align with FEMA guidelines and cases where foreign group entities are involved. The transfer pricing provisions may apply requiring documentation and benchmarking, where the company's same entities are there in India and abroad. If they are doing any transactions, it will come under the transfer pricing, foreign transfer, international transfer pricing provisions. Attract those provisions. And next comes the internal audit and the statutory audit preparedness of FFMCs. The internal audit preparedness. FFMC should have a structured and proactive internal audit framework. RBI designed to ensure that our operations are in strict alignment and applicable laws, RBI circulars, and the best practices. I am focusing under Section 285BA of the Income Tax Act 1961, entities like FFMCs which are licensed by RBI to deal in foreign exchange are required to report specified high-value transactions to the Income Tax Department. These reports filed annually in Form 61A enable the tax authorities to track unreported or suspicious financial activity. As an FFMC, we fall under the category of authorized person under FEMA and are therefore obligated to report the transactions involving the purchase of foreign currency by customers above a specified threshold. So the reportable transactions by FFMCs will be either, suppose for in this SFT code 5, received from any person for purchase of foreign currency. It will include Forex card, traveler checks, draft by sale of foreign currency. The threshold limit will be 10 lakhs or more. And the reporting entity will be either FFMCs, the banks, authorized dealers. All have to report, it is mandatory. The threshold is person wise, not the transaction wise. If a customer buys foreign exchange multiple times and the cumulative value exceeds 10 lakhs, then also in any financial year, reporting is mandatory. So how to avoid these mistakes? We have to implement the automatic systems with audit trails for Forex operations and maintain daily reconciliation and denomination-wise stock reporting. Adopt SOPs for KYC, reporting and cash handling. Conduct quarterly internal audits and mock inspections. Train staff regularly on FEMA, RBI directions, GST and income tax laws. Centralize compliance tracking across the branches with clear documentation flow. I think I have covered the aspects of the taxation and accounting and the SOPs we have to follow. Thank you.